All right, good Wednesday morning, everyone. It's time to talk about the markets with Jim Cramer on the floor of the New York Stock Exchange. Jim, stocks are up. We've got a 10-year over 3%.
Yeah, well, look, the financials always matter. They're a key group for me, and they just run simplistically. If these bonds go back to 2.9, then you'll see the sellers come in. But right now, we love Citi. We love JPMorgan. Why? Because their valuations are ridiculously low, given the fact that the yield curve is getting inflection. At the same time, Apple has huge staying power as an overall propellant. The sellers have not reappeared yet on Facebook. I don't know where they are. I keep expecting the stock to be downgraded by some people who pretty much said, hey, we don't like the quarter. So all in all, the only real negative is China. And the Chinese stocks, as I call them, are getting hit.
You're talking about the potential for more tariffs, 25% versus 10%.
Yeah, look. Yesterday was really incredible. As soon as I heard that Mnuchin saying the trade talks began, I always remember what happens. Intraday, there's pretty much a statement comes out that talks about that's not the way of the future. Peter Navarro, look, he's got the ear of the president. Now, Larry Kudlow is the ear of the president for Europe. But the president, when it comes to China, is all Navarro. And the president believes he's looking at the PMI number, he's looking at the export number, he's looking at the layoffs in China, and he's concluding that he's got China where he wants it. And he is not going to, when you get a situation like when he wants it, he's not going to take his foot off the jugular. That's just not what he's going to do. And
Jim, we got another sign that Apple is strong in China. Revenue growth was 19%.
That was a fantastic point. I mean, remember when Carl Icahn sold the stock? 100 points ago because he was worried about China? Well, let's give him 80, 90. I don't know. You know exactly what I mean. Now, here's what I'm concerned about with China. Obviously, people are going to say that the retaliation is going to be to Apple. What I am urging you to realize is that Apple's such a big employer in China, it's the last thing that China needs.
And we'll talk more about Apple's earnings in our ActionAlertsPlus.com video.
You want to be in on that, and of course you want to be on the conference call next week. We're going to talk about Apple.
But Jim, your Real Money column talked about the disparity between the P&G multiple and the Apple multiple.
I started that article
bizarre.
at 4:30. I figured I was going to finish it by 5:30. I didn't finish it until 8 o'clock because I was trying to get the best analogies, and I urge people to read it because Procter is the old mainstay consumer product stock. By the way, it grows at 1% organic growth. Apple, I used a very, very conservative blend of double digit. I come up with Apple at a 17 times earnings and a Procter at 19. Let's just switch that. And we just looked at Apple's growth. You have to give Apple a 20 times earnings multiple, which would put it substantially higher when you look at these things. So I urge people to recognize that these are both consumer product stories. One is the twilight because the brand loyalty is quite bad now. Because millennials, Gen X, and the others an ascendance because the ecosystem is so powerful. So, as Tim Cook said on the call, if you buy a watch, you have to buy the phone. If you buy the phone, you probably buy the watch. This round ecosystem, the first genuine ecosystem we've seen in ages, is so compelling. And of course, what was the last ecosystem? Gillette.
Well,
down 2%.
You saw services revenue with Apple at a record high, and we kind of saw that with SodaStream. That stock was on fire, and you have to buy the carbon every month.
Yeah, that's a remarkable beat. I guess that's probably the biggest beat for the quarter. If you want to have some fun, go check out SodaStream. Remember, Dr. Pepper is Keurig. They did that reverse. They got a guy named Bob Gamgore as the CEO. He's very good, and I want to do more on that. But SodaStream with a big beat. Apple, obviously, with 300 million people now on subscription. The subscription margins are fantastic. And by the way, they're going to replace Yahoo Finance in Apple, in the device, with what was being tested in beta. When I interviewed Tim Cook myself, he said, listen, we're testing it in beta. I think that's very important. That's a lot. There are hundreds of million people that use the Yahoo Finance as default. And, of course, I prefer CNBC and TheStreet.
Yep, I got CNBC on right here.
Both because boom, boom, boom. But, yeah, I think that's a major botch by Yahoo. They should have offered something.
Jim, also Sprint, Real Money stock of the day, they added 123,000 postpaid ads, up from the estimates of 25,000.
I thought that was very significant. David Faber reminds me, please do not think that. What really matters with Sprint is that it's merging with T-Mobile. and just get away from it if you think otherwise.
And John Ledger has told us that he thinks consumer prices will actually go down from that merger.
Yeah, I know, that's the rap. And a lot of the people, when I said it on air, like my friend Matt Horween, I write with, he said, hey, listen, Jim, you need a powerful combination in order to defeat Verizon, in order to really bring about 3 equal players, right? So you've got Verizon, you have AT&T, neither Sprint or T-Mobile independently might be able to spend on 5G the way that those two can, but together they would be able to spend on 5G, so you have 3 viable competitors, which would reduce the price of your bill. I am not ruling that out. I am just saying that this is a government that just doesn't like a lot of concentration.
Okay, we'll watch how that plays out. Meanwhile, Jim, who do you have coming up on Mad Money tonight?
Well, I have AGCO. Why is Martin Reich and Argan so important? I mean, I've got to tell you, by the way, DuPont Dow tomorrow. Dow DuPont, that's going to be a very big quarter. Very important for ag because of crop protection. I need a read on what's really happening with tariffs. And Martin knows more than anyone I know, other than, of course, Deere, which we do not have one, about what the battles are behind the scenes.
Okay, Jim, we'll watch for that. And Jim and I will continue talking about stocks, including, again, Apple, on our ActionAlertsPlus.com video. Join us there.